This could be another rough day for the markets after S&P 500, Dow, and NASDAQ futures plunged yesterday. Analysts say the reason is sweeping new tariffs from President Donald Trump, and Trump says those tariffs are not going away. Joining us now is finance journalist Bryan Borzykowski. Good morning, Bryan.
Good morning.
Thanks for joining us. Now, the markets have sort of stabilized a little bit this morning, right?
Yeah. The futures market opens in about an hour, and it looks like it might be positive in Asia and in Europe. Markets were in the black. We're doing well, but I mean, this is just today. It's been after many declines over the last few days, so the market is still down quite a bit from where it was at, even at the start of the year, the last week. So a little bit of reprieve today, but we'll see where it goes.
Now, of course, this comes in after the Rose Garden announcement with Donald Trump. The Rose Garden full of thorns, you could say. The Dow plunged, or the S&P 500 entered bear market yesterday. What is a bear market, and what does that mean? So
a bear market is when the stock market falls by 20% off its most recent high. So that is a pretty significant amount, and it happened, in a short time. The last time we saw this was in COVID. These are the worst trading days since COVID, which is, a big thing to say. In COVID, the whole economy shut down. This time, it's really kind of a man-made tariff trade war that's causing this, and it did bounce back a bit, so it's not in bear market territory right now, but who knows what could happen today. We're close to kind of getting back there.
It's so uncertain. What's the best thing that you want people to consider?
Yeah, it's extremely uncertain. And nobody is feeling good right now, and it's hard for Canadian investors because you see what's going on in the States, and there's nothing you can do, and it's hard to see where the off-ramp is here. So what you really should do is you can't panic. You might feel like you want to panic, but pulling all your money out of the stock market is not a good idea because you never know when you're going to get back in, and that's the thing. You can't time the markets. It's really easy to pull the money out now and say, oh, it's falling, I'll just keep it in cash. But anything can change. I mean, if Donald Trump tomorrow says, oh, the tariffs are off, maybe, although, maybe not, but markets could rebound quickly and you'll miss out on the gains. So at this point, you might as well stay invested. If you have a financial advisor, talk to the advisor, stick to that long-term plan. If you're years away from retirement, markets do tend to rise over time. And so you'll have more of a runway for markets to come back. If you're close to retirement, it is a little tougher, but hopefully you have more money in cash, and that's where you should, make sure you're talking to a professional there to get some advice. But really, you kind of got to just stay the course.
Why is it so unstable right now? What is exactly causing this fear and this panic?
It's the uncertainty, and it's the tariff and trade wars. This is something we've not seen. Like, this is unprecedented in our modern times, where you're going to war with countries. China and the U.S. already this morning seem to be escalating that trade war with a lot of different rhetoric and more threats of tariffs. And you're upending the global economy and supply chains. The world works, we're integrated, it's been working well for the most part. People are wealthier because of these supply chain integrations. People make, goods in China, we buy them here cheaper, and that has worked. Well, that's going to change. Prices are going to rise because of tariffs in Canada, in the US, around the world, and that's going to, make it more expensive for people to buy things, and nobody is certain how this ends, where does this go? We haven't seen this, and that's why markets are reacting, because it's all very, very uncertain.
There's fear this is going to start a recession. There's also fear that we could go as deep as the Great Depression, which was in the 1930s, which also were as a reason of tariffs. What is the concern with that?
Yeah, exactly. And it's just, we don't know where, as I said, we don't know where this is going to go. So will this get to Great Depression levels? Nobody can kind of predict what's going to happen next. And that's why it's so difficult for people. So yes, the recession fears are picking up. If we see higher prices, if we see consumers stop spending, we could see layoffs in all sorts of different industries on both sides of the border, and that's when a recession could pick up. If the economy doesn't grow, if it slows down, if it goes into negative territory, we'll get into a recession. How will that work itself out? Nobody is sure, and that's what's making people nervous. I wish I had more positive things to say here, but it feels scary, but hopefully you can just, buckle down and we'll get past this.
So don't panic. That's the main message you want to convey this morning. The Bank of Canada is expected to announce its next key lending rate on April 16th. Any predictions on what that announcement might be in light of what's happening?
Yeah, I mean, the Federal Reserve in the States and the Bank of Canada here are in a tough position because if if prices will rise because of tariffs, you don't want to lower the interest rate. You want to keep it higher. This is what we've seen over the last couple of years. Inflation goes up, you raise interest rates, and then hopefully people stop spending and it goes down. Well, what do we do in this case? You need the economy to keep going, so that's why you would lower rates, but then does inflation get out of control in a bigger way? So that's what the Bank of Canada is going to have to weigh. I think they might cut again. I think they will. They've kind of said they're going to look at this. They could cut again, although at the same time, I wouldn't be surprised if they just were like, let's wait and see what happens. But it won't be a huge cut, but we could see another decline.
Bryan, again, thanks for your expertise this morning. Really appreciate it.